Hey, John, it's really good to see you. I cannot believe the end of the year is creeping up, which is why we want to remind everybody that the clock is ticking on those 2022 conversions. If you are considering converting your IRA to a Roth IRA for 2022, we're going to break down exactly what you need to know. And I want to start with deadlines, John, because it's a big misconception about conversions that they can be done up until the tax filing deadline, but that's not right.
Correct. If you are going to do a Roth conversion on your IRA, it needs to be done by December 31st of the calendar year in which you're doing the conversion. So if you're going to do a Roth conversion for 2022, it needs to be done by December 31st. Now, do not wait till the last couple days to do this because you may miss the conversion with the transfer of funds through your custodian. So with our custodian, TD Ameritrade, they ask that we have our Roth conversions in process by the first week of December.
Right. Okay. So that's everybody's gentle reminder. So let's explain how this works then. If I convert my IRA to a Roth, there is a potential big tax bill that I'll be facing.
Yeah. So anytime I teach a taxes and retirement workshop, I get these people are super motivated and they want to convert all their money from an IRA to a Roth IRA. However, you have to be aware that when you're doing the conversion, you are buying out the IRS for that portion. So let's say hypothetically you're going to do a $50,000 conversion. You have to be aware of that the IRA conversion is going to count as taxable income. And so when we're doing this, we want to try to keep you in the 24% marginal bracket or lower. And we want to do a thing called bracket bumping, where we're taking you just up to the limits of potentially that 24% or your current bracket. The other thing you want to be aware of is that when you have ordinary income, this can also trigger the tax torpedoes of Social Security and Medicare.
Right. Important considerations there. I'm glad you brought those things up because we're going to walk people through what they do need to consider if they're trying to figure out if a Roth conversion is right for them. So walk us through this, John.
Yeah. So obviously, it's going to be your current and future tax bracket. If you're a high income earner, and as I said, if you're above the 24 to 28% marginal tax bracket, now may not be the time to do it. Maybe you do it in retirement. And if you are one of those people that you believe taxes are going to be higher in the future, like the famous CPA Ed Slott says, taxes are on sale, so buy them on sale. Don't wait till they go full price.
Right.
Expected income sources, right? Remember, this would be potentially tax-free future income, but to do the conversion, you have to have the money to pay the tax. You don't want to pay the tax out of your IRA that you're converting. So you want to have some income in your bank account or just regular income to pay the tax. And we also want to be aware of the fact that a powerful part of the Roth IRA is it gives you a lot of investment options that may not be available to you in a tax efficient manner in a non-qualified account. So if you have investments that are triggering short-term capital gains or interest income, which are highly taxed vehicles, well, guess what? The Roth IRA is tax-free.
Now, John, I want to circle back to something that you mentioned earlier about historical tax rates because we are in a historically low rate right now, which brings up my next question. Another common misconception is that we're going to be in a lower tax bracket when we retire.
Yeah. And, for some people, if you're a high income earner and you're now going into a retirement distribution, yes, you may be in a lower tax bracket. But we often find, and a lot of researchers find, that for a lot of middle class Americans, their tax brackets really don't change in retirement because they either are the lucky ones with a pension, or if they are living off their assets, if they're turning that assets into an income stream, their tax bill is now dependent on what they're spending. So if you're spending, $75,000 a year, well, chances are you're going to have to take out $100,000 plus in taxable distributions, and that's what is going to determine your tax bill. And I mean, talk about expenses, look at the year we're having, double-digit inflation. So people are finding themselves in that higher or same marginal tax bracket.
Mhm.
And
Let's
then with
also talk about the year that we're living in. It's a down market, but that presents a great opportunity for these conversions. Explain how that works.
yeah, so with the IRA, you have to realize that if your account is down in value, that's actually reduced your tax bill. If your account went from $100,000 down to 95 or $90,000, well, now that's your new taxable account. So if you did a Roth conversion in that account, and let's say you converted $10,000, now that taxable account's $80,000. You move the $10,000 over to a Roth IRA account, and when the market does recover, you're going to get that recovery plus future growth tax free. It's a better alternative and a great way to take advantage of a bad market
Mm-hmm.
because, as I said, the recovery is tax free versus keeping your money in the IRA, watching it drop like it will do. And when it eventually comes back up, that tax bill goes right back up to $100,000.
Mm-hmm. Mm-hmm. I like how at least the down market presents some good opportunities for us to maybe save some money
Yeah.
somewhere else. So again, just the gentle reminder for everybody, if this is something they wanted to do for 2022, now is the time to give you a call. So John, what's the best way to reach you?
You can reach us two ways. Give us a call at the office, 858-935-6210, or you can visit our website, www.gosecurus.com. And under the Contact Us tab, you can either schedule a 15-minute phone call where we'll answer any general questions, or you can schedule your complimentary consultation.
All right. John, thank you very much.
Thank you, Erin.